Berkshire Hathaway and 92-year-old Warren Buffett are continuing tradition and have just released the new annual letter. I'm sure you've heard about the new annual letter that's just been released by Berkshire Hathaway. Going through it, today I just wanted to highlight the important parts that I've already read through and just comment on some recent articles put out and the effect this will have on the stock. Going through the annual letter, they touch on Berkshire Hathaway's annual performance throughout the years. Here you can see from its initiation in 1965 compared to the S&P 500 with dividends included. Going through, you can see how well the stock's done. It's up 3,787% compared to the 24,000% of the S&P. Berkshire Hathaway also gives a bit of a debrief about more about them and what they do. This is written by Warren Buffett with his partner Charlie Munger, his fellow long-term investor. Warren Buffett also speaks and says, "A common belief is that people choose to save when young, expecting thereby to maintain their standards of living after retirement. Any asset that remains at death, this theory says, will usually be left to their families or possibly to friends and philanthropy. Our experience has differed. We believe Berkshire and individual holders largely to be once a saver, always a saver variety. Though these people live well, they will eventually dispense most of their funds philanthropic organizations. These in turn redistribute the funds by expenditures intended to improve the lives of great many people who are unrelated to the original benefactor. Sometimes these results have been spectacular." You can see this as well with Warren Buffett and people like Bill Gates having signed up to donate 99% of their net worth at death. A bit more of what they do. Everyone knows Berkshire Hathaway as a massive holding company that owns massive companies and stakes in other companies such as Coke, Geico, American Express, and Bank of America. Here they touch on, our goal is in both forms of ownership is to make meaningful investments in businesses with both long-lasting favorable economic characteristics and trustworthy managers. Please note, particularly that we own publicly traded stocks based on our expectations about their long-term business performance. Warren states that Charlie and I are not stock pickers, we are business pickers. That is a big thing for Berkshire Hathaway. They constantly speak about picking a good, strong business and holding on that and not worrying about the short term of the stock. Amazon and Jeff Bezos probably also said that the stock is not the company and the company is not the stock. Warren Buffett even speaks about his failures. At this point, a report card for me is appropriate. In 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so, in some cases also bad moves. He also jokes about some of the bad moves that he's made and how big decisions carry a lot of the success of Berkshire Hathaway. Here he says he goes through the secret sauce, he calls it. In August 1994, Berkshire Hathaway completed its 7-year purchase of the 400 million shares of Coca-Cola we now own. The total cost was $1.3 billion. This is a very meaningful sum at Berkshire. Imagine getting about 400 million shares of Coca-Cola for the cost of only $1.3 billion and owning such a successful company. The cash dividend we received from Coke in 1994 was $75 million. By 2022, the dividend has increased to $704 million. Growth occurred every year, just as certain as birthdays. All Charlie and I were required to do was cash Coke's quarterly dividend checks. We expect those checks are highly likely to grow. He also touches on another big holding and crucial holding that they've had in American Express. He says that it's a similar story, and Berkshire's purchase of Amex was essentially completed in 1995 and coincidentally also costed $1.3 billion. Annual dividends received from this investment have grown from $41 million to $302 million. Those checks too seem highly likely to increase. Berkshire Hathaway does not actually issue a dividend, as seen with their stock, but they do reinvest this capital into the businesses and other positions they believe will be favorable over the long term. In the annual letter, the past year is also briefed. He speaks about the good year in 2022. Going through some of the earnings, you can take a better look at this if you go through and read it yourself. But overall, in comparison with the market, they did not have a bad year at all. You can look at the stock's performance over the year and see only a 4% downturn, in comparison with the S&P, where it was a lot closer to almost a 20% downturn, and the Nasdaq much bigger. Another positive was Berkshire, which they touched on, was their recent purchase of Allegheny Corporation, a property casualty insurer captained by Joe Brandon. He speaks about his working with Joe in the past and how this will benefit Berkshire shareholders. They've also increased their insurance float from 2022 from 147 billion to 164 billion, but more to go on those numbers as they come through. Buffett also touches on a very minor gain in per share intrinsic value that took place in 2022 through Berkshire Hathaway's share repurchases, as well as similar moves in Apple and American Express, both significant investees of ours. At Berkshire, we directly increase our interest in our unique collection of businesses by repurchasing 1.2% of the company's outstanding shares at Apple and Amex. Repurchases increased Berkshire's ownership a bit without any cost to us. So that just means when Apple and Amex are repurchasing their shares, Berkshire and all other investors are just getting a bigger piece of the pie. Like he says, the maths isn't complicated. When a share goes down, your interest in our many businesses goes up. Every small bit helps. If repurchases are made at a value accretive price, just as surely, when a company overpays for a repurchase, the continuing shareholder loses. At such times, gains flow only to selling shareholders and to the friendly but expensive investment bankers who recommend the foolish purchases. This basically just says that companies should be repurchasing their shares at a discount and not be repurchasing them when they're overvaluated. That way shareholders can get a bigger piece of the pie and they don't have to pay for. He jokes about investment bankers and other people recommending that they buy back these shares at higher prices. Warren also speaks about a very important warning. Even in the operating earnings figures that we favor can easily be manipulated by managers who wish to do so. Such tampering is often thought of sophisticated by CEOs, directors, and their advisors. Reporters and analysts embrace its existence as well, as beating expectations is heralded as managerial triumph. He discusses is disgusting. It's required no talent to manipulate numbers. Only a deep desire to deceive is required. Bold imaginative accounting, as a CEO once described his deception to me, has become one of the few shames of capitalism. Here, Warren is just discussing how certain businesses alter and change their balance sheets to become more attractive to investors and to beat out on earnings, this hopefully resulting in the stock price going up and the companies getting more money. Charlie also speaks about here in the 58 years and few figures. He speaks about the journey and the bumpy road to 2023. They also speak about how Berkshire now owns a majority ownership in unmatched collection of huge diversified businesses. He says, let's first look at the 5,000 or so publicly held companies that trade daily on the Nasdaq and the New York Stock Exchange, and related venues. Within this group, it's housed a member of the S&P 500 index, an elite collection of large and well-known American companies. In aggregate, the 500 earned $1.8 trillion in 2021, stating he does not have the 2022 figures, therefore only using the 2021. Only 128 of the 500, including Berkshire itself, earned $3 billion or more. Indeed, 23 lost money. At the year end of 2022, Berkshire was the largest owner of 8 of these giants: American Express, Bank of America, Chevron, Coca-Cola, HP Inc., Moody's, Occidental Petroleum, and Paramount Global. In addition to those 8 investees, Berkshire owns 100% BNSF and 92% of BH Energy. This just shows you the massive size of Berkshire Hathaway. You look at these companies, like he says, these are 8 of the biggest 500 companies in America, and they own them, all in different sectors. You have ones like Bank of America in finance, you have Coca-Cola, you have petroleum, you have everything, and they're well diversified. It's almost like an index fund. Another major part that people might skip over, but that I thought very important of the annual letter was the part that Warren Buffett says here. As for the future, Berkshire will always hold a boatload of cash and the US Treasury bills, along with a wide array of businesses. We will avoid behavior that could result in any uncomfortable cash needs in inconvenienced times, including financial panics and unprecedented insurance losses. Our CEO will always be the chief risk officer, a task that is irresponsible to delegate. Additionally, our future CEOs will have a significant part of their net worth in Berkshire shares brought with their own money. And yes, our shareholders will continue to save and prosper by retaining earnings. This is a big part. He speaks about future CEOs because we do understand that Warren Buffett is 92 and Charlie Munger is 99. So there will be a future CEOs and future leadership positions opening up. He also speaks about how they will have to invest a part of their own net worth into Berkshire Hathaway shares. That way, leadership will also be shareholders and can't just delegate it off. They will actually be able affecting their own net worth. He also ends it with, at Berkshire there will be no finish line, just kind of assuring investors that when the two pass, the company will continue to go on under new leadership. Another surprising fact which they spoke about was federal taxes. If you read through, you would have already seen this, but Berkshire comments on how much that they are spending on taxes and kind of putting it into perspective. Charlie and Warren are not against paying taxes, and they're actually more than happy to pay it, especially if it's going to the United States of American people and trying to make the country better. The $32 trillion of revenue was garnered by the Treasury through individual income taxes, 48%, Social Security, 34% in corporate income tax payments, and 8.5% in a wide variety of lesser levies. Berkshire actually contributed via corporate income tax was $32 billion during this decade, almost exactly 0.1% of all money that the Treasury collected. And that means, brace yourself, had there been roughly 1,000 taxpayers in the US matching Berkshire's payments, no other businesses, nor any other country's 131 million households would needed to have paid any taxes to the federal government, not a dime. This just puts it into perspective that if the major companies in the US all just paid a reasonable tax bill, that would take a lot of the pressure off individuals in America from paying their own taxes. Again, it doesn't mean that taxes would go to zero for a lot of people as it could potentially be, but if corporate taxes was just a bit more strict and there wasn't as many loopholes, the average everyday American would have a huge weight off their shoulders. He even jokes and says millions, billions, and trillions. We all know the words, but the sums involved are almost impossible to comprehend, and he tries to put it into a physical version. If you convert 100 million into newly printed $100 bills, you have a stack that reaches your chest. Perform the same exercise with 1 billion, and it's getting exciting. The stack reaches about 3/4 of a mile into the sky. And finally, imagine piling up 32 billion, the total of Berkshire's 2012 to 2021 federal income tax payments. Now the stack grows to more than 21 miles high. That's about 3 times the level at which a commercial aeroplane usually cruises. Warren also talks about how good it is having a great partner. He speaks about how him and Charlie are very alike, and he even goes through some of his thoughts that a few actually lifted from very recent podcasts. He has some quotes in there, such as the world is full of foolish gamblers, and they will not do as well as patient investors. You can read through more of these and kind of go through and find any that you like. Other ones include patience can be learnt. Having a long-term attention span and the ability to concentrate on one thing for a long time is a huge advantage. There's a lot more good quotes in here if you wanted to go through yourself on the annual letter. Charlie also speaks about the Berkshire annual shareholder get-together. He was saying how it's been 3 years and how he's going through and how there will be another one coming up. He even jokes about some of the food offerings and treats at the venue. Warren Buffett also speaks about other important things. There's more into it if you wanted to go read it yourself, but in regards with dividends, as said earlier, Berkshire has not declared a cash dividend since 1967. They also included this, which was their common stock repurchase program. Like many companies, Berkshire also repurchases their stock. As they say here, The Class A and Class B shares, they can be bought back at any time by Warren Buffett and Charlie Munger when they believe that the repurchase price is below Berkshire's intrinsic value. You can see through just how much stock that they bought back across both the Class A and Class B stock. They also include a stock performance graph. This puts, from the start of 2017 till the end of 2022, $100 invested into Berkshire stock versus the Standard & Poor's Index, and also the Standard & Poor's Index of Property and Casualty Insurance Index. You can see since 2027, the two S&P and Berkshire have traded pretty much exact, meaning $100 invested would have got you $157 5 years down the track. Like I said, there's a lot more to this if you wanted to go check it out, where they speak about all the individual holdings, and I believe it's almost over 100 and close to 140 pages. But what I also wanted to talk about is also these articles that have been put out. CNBC released Berkshire Hathaway's fourth quarter operating earnings fall 8%, cash holdings swells to nearly $130 billion. While Berkshire Hathaway's profits did fall, they have increased their cash position. Berkshire Hathaway's operating earnings totaled $6.7 billion in the fourth quarter of 2022. That's down 7.9% from the earlier period. Earnings from Berkshire's railroad, utilities, and energy business came down to $2.2 billion in the fourth quarter. Overall, going through it, you can get a better look if you go through yourself, but you can also see one of these articles to kind of get a bit of a summary. As stated earlier, Warren did say, "We will also avoid behavior that could result in any uncomfortable cash needs and inconvenience times." Overall, the earnings did drop to $18.164 billion in the fourth quarter of 2022, which is a 54% decline from the same quarter a year prior. And for the full year, overall earnings tumbled 125% to a loss of $22.819 billion. Regardless, Buffett often gives little weight to changes in the firm's quarterly or annual results. But these results and earnings reflect Berkshire's fluctuating in equity investments. Another article kind of speaks when Warren Buffett's stock buyback critics is calling them economic illiterate. Warren Buffett defended stock buybacks in Berkshire Hathaway's annual letter, pushing back on those railing against a practice he believes to be beneficial to all shareholders. He said, "When you are told the repurchases are harmful to shareholders or to the country or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue." The initiated buyback program in 2011 relied on the repurchase in recent years during the competitive deal-making environment and expensive stock market. The conglomerate spent a record $27 billion in buybacks in 2021 as Buffett found few opportunities externally. This just means Warren Buffett was not finding any opportunities to delegate the money elsewhere, so he decided to use it to repurchase stock in the company, allowing them a bigger piece of the pie, same with shareholders. Repurchases slowed down to about $8 billion as billionaire investor went on a buying spree with stock selling off. Again, with stock prices falling down, this is when you want to invest your capital, and that is what Berkshire Hathaway is doing. So when they can buy businesses at a discounted rate, why not do so? Such as we touched on earlier with their $11.6 billion acquisition. Overall for shareholders, it has been a disappointing year, with the stock falling as much to $260. The stock has rebounded up, but has been trading a lot very sideways. In the last 3 years, it's around up nearly 50%, and as of recent times, again has been trading very steady. As someone who used to own Berkshire Hathaway stock, it is a very good company and a very good holding company, holding a very diverse portfolio and run by one of the best investors ever. Overall, this letter should tell investors a bit more about what is going on right now at Berkshire Hathaway and the points going forward. Overall, if you wanted more information, feel free to read the annual report and read the annual letter released by Warren Buffett. This was just my take as someone who previously invested into it and always likes keeping up with Berkshire, just to stay on top. Leave your thoughts and if you are a Berkshire Hathaway investor and how you thought the annual report went.